Okay, developers, welcome back. This video is brought to you by DeFiChain, and in this video, we're going to be looking at their proof of stake blockchain on the Bitcoin network, dedicated to bringing decentralized financial applications and services to everyone. If you're new here, I'm Calvin Torra, and on Eat the Blocks, we help Web2 developers transition into Web3. The two co-founders Julian and Yuzen of DeFiChain met in 2016 and worked on a few projects together but lost touch until 2019. That's when a brainstorm they had ended up becoming DeFiChain. Julian has been credited as a leading authority in the crypto and blockchain space, and Yuzen was the creator of the first CBDC of the Bahamas, the Sand Dollar. They also co-founded Cake DeFi, a highly transparent one-stop solution for lending and staking crypto. DeFiChain is a decentralized proof-of-stake blockchain. Their mainnet went live on May 11th, 2020, to coincide with Bitcoin's third halving event. It was created as a software fork of the Bitcoin network to enable the ability to build DeFi applications with the security and immutability of Bitcoin. DeFiChain's decentralized exchange offers fast transaction speeds, low fees, and a fully decentralized trading environment. Max transaction speeds are just above 2,400 per second, and the network offers liquidity mining, staking, decentralized stocks like Mirror Protocol, and decentralized loans, similar to MakerDAO but with more functionality. Most interestingly, DeFiChain is the only blockchain that offers decentralized assets on Bitcoin. These assets are tokens on the blockchain designed to give you price exposure, although not ownership, to assets such as stocks, bonds, ETFs, and more, without leaving the DeFi ecosystem. DeFiChain comes with a new concept called dTokens, and these can be minted by anybody on the network. Decentralized assets are one of the most innovative and revolutionary products of DeFiChain. These dTokens are not securities issued by a company or a large institution, meaning they give users price exposure, but not ownership, voting rights, dividends, or any other benefits available to stockholders. Now, when it comes to dTokens, users are no longer required to deposit at least 50% of the collateral in the form of DFI token. After the Fort Canning Road upgrade, DeFiChain's native stablecoin, DUSD, is treated the same way as the mandatory 50% DFI in vaults with a fixed price of 99 cents. This means that users are no longer required to provide at least 50% of the collateral in the form of DFI when minting new dTokens. Now you can just mint new dTokens by providing only DUSD as collateral if you want. You can then mint your dToken and take out a decentralized loan. You can then use this dToken loan to trade on the network's DEX, use it for liquidity mining, or just hold it as an investment. In order to close your loan and get back your crypto, you need to pay back your dToken loan with interest, and all of this is outlined when taking out the loan to begin with. Now, one of the advantages of these dTokens is the ability to maintain your privacy. You just need the wallet on your phone and no verification is required. And because they're on your phone, you always have access to your dTokens. You're also able to buy smaller amounts of dTokens. So if someone mints a dTesla token, you can buy 0.1 of that token. You can also transfer your dTokens into a liquidity pool and earn additional returns for providing liquidity. I think it's important to note that you're not buying the stock itself. These tokens we're looking at here live solely on DeFiChain, and their price isn't related to the company itself. Rather than tracking and reflecting the actual stock price, these dTokens track and reflect a number of variable factors to closely follow the stock price, and it uses oracles to capture those feeds. The price of dTokens may not always mirror the underlying asset's price because of fluctuations in the supply and demand of dTokens. Now, in more recent news, it looks like the continual strong demand for dTokens meant they were trading at a premium of 10 to 15% above the prices for similar equities. And this kind of discouraged investors from taking a position in dTokens. And because of this, they recently rolled out the Fort Canning Road hard fork, which fixes the premium pricing issue of dTokens. As a result of this, dToken values will remain within a 5% range of real-world share prices. DeFi chain users have a low-risk, short-term arbitrage opportunity if the price of a dToken is more than 5% away from the true price. dToken prices are brought within a 5% range of the respective stock's price every 7 days, or every certain number of blocks. You can see they've put a lot of effort into onboarding users. They have 6 wallet options, from the DeFiChain mobile app for iPhone and Android, the DFX mobile app for storing, receiving, and sending tokens simply. They also have a desktop app that allows you to transact, perform liquidity mining, swapping, and it includes a full node. Then they have a wallet for Raspberry Pi, a CLI terminal version, and last but not least, an Electrum version for treasury use cases. DeFiChain has an entire website dedicated to community projects, YouTube videos, articles, and blog posts. It's a really good effort on curating all of the content around this network. So we can see here on tools and apps, we have a list of projects that are currently on the network. There seem to be quite a few options for tax calculators. We have APR checkers, DEX price and chart apps, and DeFiChain bridge. And then all the platforms where you can buy and sell DFI. Then on the Community Projects tab, we can see what people are building on the network. We have things like DeFiChain Punk NFTs, Masternode monitors, and analytics dashboards. Now, I really like it when projects publish their roadmap with easy to understand goals. We can see here on their site that we're looking forward to a browser wallet extension, futures and options, NFT support, and ledger support for this year. Lots of things coming up. Now, not forgetting, we can see here on their GitHub that quite a few of their community members are voting for EVM support, so I think we could be looking at something coming out very soon. And that's going to allow Ethereum developers to get some of their dApps on the network. Also, looking at all the things they achieved last year laid out here. Things like achieving 100% carbon neutral blockchain status, which is important to many people, as well as things like releasing their Block Explorer DeFi scan. Also, we're looking at some big goals for the coming future. Between 3 and 10 years, we're looking at up to 50 times leverage on collateral. They're also looking to become the de facto blockchain for transactions between countries and sovereign states. DFI is the native token for DeFiChain, and it's listed on the leading exchanges like KuCoin, Bittrex, Bitrue, and others. The DFI token has seen steady growth in price, gaining over 50% in the first few months that it started trading. Now, you can't transfer native tokens like Bitcoin and Ethereum to your DeFiChain wallet, but you can mint dBitcoin and dEthereum using the DFI token as collateral. On the Block Explorer, we can see the current price along with the locked value of over 1.5 billion. Circulating supply is over 500 million. We can see here the recent transactions as expected, but here we can see there is some decent activity. We also get to check out the DEX pool pairs for dTokens. Looking at their developer section, we get sent to the GitHub repo. We can see that DeFiChain is a fork on Bitcoin Core from a particular commit, but from this they have done significant modifications, like moving from proof of work to proof of stake, community fund support, increased decentralized financial transaction and opcode support, and more. Their README leads to a few quick start links, including running a node with Docker, and also building from scratch. Setting up nodes is exactly the same as running one for Bitcoin, so they do suggest to follow the Bitcoin guide while they build out their docs and instructions. On their DEX page, we can see liquidity mining for up to 100% returns, and they have a step-by-step guide on how to liquidity mine with the DeFiChain app. So let's have a quick look into how to get started with that. So first, we download the app from their downloads page, navigate to the liquidity tab on the desktop app, and we'll be shown some videos to learn more about liquidity mining and how the DEX works. We'll also see the available pool pairs and the total liquidity in each pool, along with the APR. From here, we'll decide which pool to work with. You can supply liquidity in Ethereum, Bitcoin, and USDT. To move forward, you'll need to have enough coins in your DFI wallet. The current version of DeFiChain only accepts wrapped tokens, so you can get those from the DEX itself or places like Cake DeFi that are integrated with DeFiChain. Once you're ready, you can hit the Add Liquidity button and choose an address that you want to receive rewards to. Verify everything is all good and click Supply. Once everything has gone through, you'll get a transaction hash that you can view on chain. You'll then have a new liquidity screen showing how much you've committed to the pool. So looking at their socials, their Discord is just over 2,000 members and their Telegram is just under 10,000 members. So there's plenty of activity for you to get a feel for the community and do your own research. DeFiChain looks like they are making big strides in the space, and their goals for the next few quarters as well as the next 3 to 10 years are looking pretty exciting. Their dTokens are looking promising, and I'm really interested to see where this goes in the coming months and years. We'll leave a link in the description below so you can go and check them out for yourselves. That's all for this video. Thank you for watching, and I'll speak to you soon.